Okay. All right, I want to welcome everybody to the Profit Zone, the Trading for Profits class. I am Angela Williams, CEO of Infinity. In my econ, Trading for Profits is my financial investment education company. Tonight, we are doing session 2 about mastering the futures market. Tonight, we're going to dive into the indicator charts. You're going to get an idea what the perfect setups look like and the profit zone trading plan and placing your first trade. So again, this class is going to be a lot of information tonight. You're going to need to rewatch it over and over again. But eventually you're going to get it when you start taking a live trade. So again, disclaimer, I'm not a financial advisor. I will not tell you what to invest in or what stocks to pick. This is a training for educational purposes only. Please be aware that all trading transactions can result in potential loss, and you should only be trading with disposable income and not leverage more than you can afford to lose. Disclosure: you may not discuss, share, reproduce, copy, reprint, modify, rewrite, create, distribute, publicly display charts on social media, publicly perform, license, or sell content retrieved or learned from this presentation without the express prior written permission of myself. And I'm so serious about this, y'all. The Trading for Profits group is by invitation only. So if you know anybody who might be interested, please reach out to me. Again, as we go through the training, every time I do a new session, I will update the link in our group. On the left-hand side, under discussion, there is a link called units. When you click on units, you will see all 4 units. And as I do a new recording, I will always update the previous unit, okay? So last week's class is actually uploaded to the first unit. Now, in the first unit, you'll also see videos on how to import charts into Thinkorswim, how to take a trade in Thinkorswim on your desktop, how to take a trade if on your phone, if you got an iPhone, if you got an Android, as well as how to take a trade if you're trading from your iPad. Also, there is a video on how to set your charts up, how to set a chart up on your mobile phone. Now, keep in mind, the mobile phone is not going to mirror your desktop charts, but we can still do Bollinger Bands and get really close, and it all makes sense in a minute. Okay, everyone should have their Thinkorswim account open. You know, we used to go different routes. What we used to do is we used to open up mirror trade accounts, and when you open up a mirror trade account, you automatically get access to Thinkorswim indefinitely. The second way is you can go straight to Thinkorswim. And when you go straight to Thinkorswim, you're basically getting a 60-day trial. Then after that, you know, you put $20 in the system and you still will have access to it for the rest of your life. So of course, when it comes to the futures market, which is what you're trading, we're actually not trading futures in Thinkorswim. We are using Thinkorswim as our charting platform. Now, if you ever get to a point where you start trading full shares of stock, or if you start trading options, you can do all that through your Thinkorswim platform, okay? So everybody should have Thinkorswim open. Once your Thinkorswim is open, you need to import your charts. And I put in the group the link for the chart. Remember, you just copy the link. Don't press the link or click the link, just copy the link. You're gonna open up Thinkorswim, and then you're gonna import the chart. Now, make sure that when you import the chart, right here, you see my little red cursor. In the upper right-hand corner of Thinkorswim, you're gonna see these little window panes. When you click this window pane, you will be able to do a save as grid, and you're just going to create a name for your chart, click save, and that way every time you open and close your Thinkorswim, it's always going to go back to your charts, okay? Now, to make sure that you are on the demo side, which is the paper money side, which is the fake money side of Thinkorswim, you want to make sure that when you open up Thinkorswim, in the corner on the upper left-hand side, make sure it says simulated trading. Make sure it says simulated trading. That is your paper money account. Next to simulated trading, you're going to see the data feed. Now, for many of you, your data feed may say delayed data. If you're in Thinkorswim, it may say delayed data. Now, the old way, we used to open up our Ameritrade accounts, get Thinkorswim, and then we used to contact customer support to get real-time data. Now, what I have been told is if there is no money in your account, you may have to settle with delayed data. But if you do got some form of money, like I said, it could be $25, it could be $50 in your account, then you can get real-time data. It really doesn't matter because it's paper money. If you follow the system and the charting, you're still going to win. So whether it's delayed data or connected data, if you are in the markets at the right time based on what I'm going to teach you, you're going to always win. Okay, not always win, but you're going to increase your chances to win. Now, again, this is what your chart is going to look like when you open up Thinkorswim. It's just going to look like a whole bunch of squiggly lines. You have no idea what it's going to mean, but I'm going to break it down tonight. When your charts have two charts within it. So the left-hand side is going to be a 15-minute chart. So on the left-hand side chart, you're going to look up here and you should see a time stamp. This time stamp should say 15 minutes. Your right-hand chart, time stamp, could say 4 minutes or 5 minutes. You know what, you guys? I think I'm trading, I'll be trading 5 minutes. So I'm not sure if your chart say 4 minutes or 5 minutes. Either way, it doesn't matter. Okay, 4 minutes or 5 minutes. And basically, this 4 minute, 5 minute chart is for scalping. This 15-minute chart is kind of catching a long range run, but also is for people who have anxiety, you know, because basically a candle changes every 45 minutes and that may scare some people. So a longer time frame is a little bit of a slower pace and sometimes make it easier for people to get over the anxiety of actually taking a trade. Now, both of your charts should have the ticker symbol \ES. \ES. ES is the ticker symbol for the S&P 500. Now we can trade any index, we can trade NASDAQ, we can trade Dow, Russell, all of that. But for trading purposes, we are going to stick with the S&P 500. So again, make sure both of your charts have the right ticker symbol, all right? Now, with your mobile, the ticker symbol will be different. And this is only for mobiles. Now, the futures contracts change every 90 days. So the ticker symbols on mobile devices only, or for those who are trading live in NinjaTrader, your ticker symbols will change every 90 days. Okay, so for the mobile, the current ticker symbol for your phone, whether you're using a phone or you're using an iPad, the current ticker symbol is \ESM20. So ESM20, that is the current contract, and this contract expires in June. So make sure that when you're using your mobile, you got the current contract. With the Thinkorswim desktop, it is always going to be whatever the current contract is. That's why we just do ES. It automatically updates for us, okay? But it's only in mobile that it matters, okay? And as you can see, if you watch the videos for your mobile, you will know how to set up these little Bollinger Bands, because as you can see, your chart on your phone is not going to look 100% like the chart on your desktop because they do not mirror. So the only thing that you can do on your phone is you can do the Bollinger Bands, okay? Now, this is what the new chart is going to look like. If you did the new import, it looks like this right now, I believe. No, that ain't what it looked like. This what mine looked like. But I actually changed it again since because I updated this presentation today and then I changed it again. So I'll drop the link. Matter of fact, I'll drop the link after this webinar so you will know yours will look like mine, okay? But again, on the right-hand side, it is your scalping chart. It is 5 minutes, so what y'all got is 5 minutes. And then I have a number of indicators that I will go into detail about what they mean. Again, for those of you who have been in this class before, you want to always make sure you're working off of the most current chart. Every time I teach this class, the charts are different because I always try to figure out a way to make it easier for you to understand. Okay, and then obviously on the left hand chart, I think you guys initial chart had maybe volume or something. I changed it to money flow index, so I changed it again, so it's gonna all make sense. All right, so let me go and we're gonna break these charts and the sections of these charts down so that you can understand what the charts are actually saying to you. And so if you did my link, your right hand side chart is a 5 minute and your left hand chart is a 15 minute. Okay, what you'll notice from your charts is you're gonna see these horizontal lines right here, okay? And they're in different colors, all right? So what I wanna do is I want to explain to you what these horizontal lines mean. And basically what they are is what we call pivot points. And pivot points is a calculation that is automatically made for you with this indicator, and it is creating resistance and support. And basically what I mean by that is these candles, they move around a certain range. And these pivots look at the range and then give you an idea of where price could possibly go at any point in time. So the purple horizontal line is considered the moving average. 80% of the price action, meaning all the candles, usually stay around this purple line. Now from this purple line, it will either, the price action will either break down or break up, okay? So in this case, the price action for this session was on the purple line, and then it started to break up and move up, and then it hit this red line. This red line is considered resistance. It's almost like a ceiling. What happens if you took a ball and you in your room and you threw the ball up at the ceiling? What would normally happen? Because of gravity, it would normally hit the ceiling and fall back down a little bit, okay? And so what this does is it tells me that as price starts to move up, it's probably gonna pause right here. Now, usually it'll pause and it may fall back down to this moving average because that it almost acts like a magnet, all right? Or if there's a lot of volume, meaning a lot of people in the markets, a lot of buyers in the market pushing the candles, it can break through this resistance, and this resistance now becomes a floor as the candle makes its way to the next resistance level. And so every time price action hits a resistance for the first time, it will naturally fall back down a little bit. Okay, so it's actually going to give you an opportunity to scalp. And so you always want to be mindful of where the candles are in relation to these pivot points. Now, let's say it breaks below the moving average. If it breaks below the moving average, it's going to make this way to this little pink line. Well, this pink line is considered support. Support is almost like the floor, right? So if you had a ball and you playing basketball and you bounce it on the floor, what happens when the ball hits the floor? It naturally reverses and comes back up, just how basic gravity happens. So normally, if it's not a lot of volume in the marketplace, Every time a candle hit the floor, it'll reverse and go back up again. Now, if it's a lot of sellers in the marketplace and a lot of volume, it can push past this support and try to make its way all the way down. So sometimes when you're doing some trend trading, it's trending down, 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 and you're trying to figure out about how far down could it possibly go. Look at your pivots. Look at your pivots. It's going to fall up in here. Now, sometimes it can break past all the pivots, and then it's going to have to recalculate. But this is a good judge of how far the price is going to go up and how far the price is going to go down at any point of time. Now, here's what I will tell you. Anytime the price action hits a pivot point, because these are major pivot points, anytime it hit it for the first time, the candle is going to automatically do the reversal. So if it's going up and it hit the ceiling, it's going to automatically fall down a little bit. It don't mean it's going to fall all the way down, but it's going to fall down a little bit to give you a scalping opportunity. Usually when the price action hits a floor or support for the very first time, it will reverse and go back up. You kind of see it here, reverse, it hit this floor, reverse, went back up to the moving average. Then fell back down to the moving average, hit it again, reverse, and went back up. Now, usually if a candle goes up and down, and it hit resistance for a third time, or it hit support for a third time, it usually breaks through. So it's almost like standing in the same place with a sledgehammer, and you keep hitting the floor, hitting the floor, hitting the floor. Eventually, you're going to get a hole in the floor, and you can fall through. That's how these pivots work. And so anytime you're looking at trading, always be mindful of where the pivots are. Now, when you open up your system, because it's going to look like some squiggly lines, what you need to first understand is that there are sessions to trading, okay? And so when you initially open up your thinkorswim, you're going to see these, it look like sections that have different colors. The gray sections is the aftermarkets and the pre-markets. The black section is always the New York Stock Exchange section. So this is always 8:30 a.m. to 3 p.m. Central Standard Time. Okay, 8:30 a.m. to 3 p.m. Central would be the New York Standard Time. Okay, so that means 9:30 a.m. to 4 p.m. Eastern is the New York Stock Exchange market, which is the biggest market ever. Okay, that is in black. So this little section here is the New York Stock Exchange section. The grays are aftermarkets, and aftermarkets could mean international trading. Can definitely, the international markets and news internationally can affect the aftermarket. Okay, because remember, the futures market can be traded 23 hours a day. The most of the money is in that 8-hour, not really, yeah, pretty much kind of like 8-hour window of the New York Stock Exchange. Okay. So what you want to be able to do is you want to be able to pull up the current session so that you can zoom in on the candles. So to be able to do that, when you open up your charts, you're going to go right here. As you can see, this was black. Okay, so I wanted to be able to see what the candle setup was for this current session. So what I'm going to do is I would take my cursor, I will go to the top of this chart, I would left click on your mouse, hold it, and you're going to see how the whole section is going to highlight, and you're going to drag it over. So when you drag it over, you're going to see this whole section highlight. So you're going to drag it over from the gray area to the gray area because you want to see these candles up close in this black area, okay? So you put your cursor here at the end of the precession, hold it, drag it to the right, it's going to highlight, and then you're going to release. When you release, this is what it's going to look like. This is going to zoom in on the candles, okay? Now, because you're zooming in, you're not going to be able to see all the pivot points in your chart because you're zooming in. But it's always good to be able to see at least one or two, okay? And so the best way to be able to put, you know, at least one or two pivot points on your current view, put your cursor in this black area. So right here is your price points. These are the prices of the future asset. There's a little empty black space. When you put your cursor and you left click on your cursor and you start to drag it down, it's going to move your chart in a way that you'll be able to see at least the moving average and the next pivot point. Because you kind of want to know how far you are to the next pivot. You can bring it down to where you have one resistance and one support, or you could just have a moving average and support, or a moving average and a resistance. It doesn't matter, but at least have at least two pivot points in view. Okay, that way you can always kind of see where the major price points are. Okay, so the way to maneuver to make your chart a little bit smaller is to put your cursor in this black area next to the prices and just move it up and down. Okay, just move it up and down. And so now you can see the candles a little bit better. Now you're going to do the same thing on the left side chart. And so you only want to see the current trade session. And so when you zoom in, you're going to be able to see the candles better so that you can make a decision on when you want to get into a trade. Okay, so if you're trading on the right-hand side, which is a 4-minute, 5-minute chart, okay, you are taking all your entry trades on the 5-minute. You can use the 15-minute to see the overall trend as well, okay, on a longer time frame. Because with this 15-minute chart, every last one of these candles represent 15 minutes, okay? So every time you look at a candle, this is what happened in a 15-minute time period. These 15-minute candles are made up of these little 4- and 5-minute candles. So 3 candles over here, three to 4 candles over here is equivalent to 1 candle over here, okay? So even if you decided to say, hey, I'm going to trade the 15-minute chart, you can always use the 5-minute as a gauge. So if you see a buy on the 5-minute, you're going to be comfortable doing a buy on the 15-minute because you know that these candles represent 15 minutes, okay? Now, let's talk about what the indicator means, all right? So, the indicator that we are using is called a Bollinger Band, okay? Because what we're doing is we're getting into the technicals. See, when it comes to trading in the futures market, we do not care about the fundamentals, which means we don't care if a stock is doing good or a stock is doing bad. It does not matter. We don't care if a company got bad revenue. We don't care about anything. The only thing we care about is what are the candles telling us. So what I'm teaching you how to be is a technical trader, okay? And the concept is simple. You want to buy low and you want to sell high. And so what the Bollinger Bands do is they pretty much hold 90 to 95% of the price action. So that means that 90 to 95% of these candles will fall in between these Bollinger Bands. So these lines right here at the top that's in gray, these are Bollinger Bands, okay? So this bottom line is the bottom of the Bollinger Band. The bottom of the Bollinger Band just basically means that that's the lowest price at that point in time. The top Bollinger Bands just represent the highest price at that point of time. Okay, so the top band means overbought. Okay, so that means that whenever a candle hits the top band, that means that it's overbought and the price is going to majority of the time, fall back down and make its way back to the bottom band. Okay, so that means that when the price hits the top band, you want to be looking for an opportunity to sell, get into a sale and ride the price back down. When the price or the candle hits the bottom band, that means that it is oversold, which means you're looking for an opportunity to buy from the bottom band so that it can make its way back up to the top band. So 90 to 95% of the time, price is going to bounce from the top to the bottom bands. So you selling from the top band, you buying from the bottom band. That's about as simple as it can be. Okay, now of course something so simple has to have some others, right? That you want to be looking out for. So here's what it is. Anytime, again, if you see a price action hits the top band, it can represent an opportunity to sell. A solid candle also means that the price is going down. A hollow candle means that the price is going up. Okay, and this is just something you need to be mindful. So normally, green candles mean up, red candles mean down. So just based on colors, green is up, red is down. But what we've done is giving you an idea of the current trend. So what that means is, you see how this candle right here is a red, but it's hollow? What that means is that the price is going up, but it's going up during a downtrend. And so the colors match the trend of the marketplace. So when you see consecutive back-to-back green candles, that means you're in an uptrend. When you see back-to-back consecutive red candles, that means you're in a downtrend. But a hollow candle means the price is going up. So this is telling you that the price is going up, but in a downtrend, which means you don't want to be in a candle buying, thinking that it's going to go up more. It could possibly go back down because it's going up in a downtrend. Okay. Just, I guess I don't want to keep it too technical. Okay, so there are 4 trade strategies when you're dealing with Bollinger Bands. Okay, so you can sell high. That means the candle hit the top band and it started to, and I'm gonna go into the setups that you're gonna look for when this happens so that you know when to sell and when to buy. Okay, but I'm just giving you an overview. When it hit the top band, you want to be able to put in a sale. You want to sell high off the top band. The second strategy is you can buy low. That means a candle is coming from this bottom band, you can buy low. So you can buy low and you can hold your position open and you can go up here. You can hold it open, go way up here, hold it open, go way up here, hold it open and go way up here. Okay, now for scalping, it's in and out. I want you to get used to being able to get in the money, get in and out. So I don't suggest you hold them open just yet until you increase your skill level. But at least if you got to buy down here, because we buy low from the bottom band, you'll make money from here to here. And even these little moves can be a significant amount of money for you. Okay. Now, you can also trade what we call trend trading. And trend trading is when you're following the trend. When you see back to back to back to back to back candles in one color, that is a trend. So you just jumping on a train and you riding it. So in this case, this is a downtrend. You jump in and you ride it all the way down. Okay. This right here, all you see is a whole lot of green. It's an uptrend. You jump on the train and you ride it. That's what trend trading is. So you can buy low, you can sell high, you can trade a trend, and then the fourth strategy is you can trade breakouts. Now, these Bollinger Bands, the more money that's in the market, the further the bands are expanded from the candles. When the bands get really, really close, that is considered a squeeze zone. Whenever there is a squeeze zone, you do not trade. But after every squeeze zone is a breakout in one direction. And so if we look at this right here, the Bollinger Bands are really tight together. It's a squeeze zone. The candles are going sideways. There's no move up, it's no move down. And then eventually, you see how it went from being tight to it seemed like the band popped out here and popped out there. It almost looks like a C. That lets you know that money came. So it went real tight and then it turned into a C. So there's money there. So what you're doing is you're waiting for it to break out in one direction. And what it did is it broke out to the upside. So it moved up, went sideways, squeeze zone, broke out again, came down a little bit, moved sideways, and broke up. Okay, so there's 4 strategies with Bollinger Bands. Sell from the top band, buy from the bottom band, trend trade by following consecutive candles that's in the same color family, and breakout trades that happen after a squeeze zone. So that's 4 different setups. Now, I like to trade breakouts because to me, breakouts always gave me good money. So what I would do is I'll wait until I see a squeeze zone. And as soon as I see a squeeze zone, that was my alert that it's about to break out in one direction. I just got to wait for it. And so when it break out, it's either going to go up or it's going to go down, and it's going to be real simple. And I'll catch a trend at the top or the bottom. Okay. So that's me. I like to trade breakouts. Now, some people only like to short the market. That means they always sell when the candle hits the top band. There's some people that only like to go long, so they only do buys from the bottom band. So once you start practicing this strategy, you'll realize what it is that you like to do and what you get your wins off of, and you just keep doing that. But I want you to know that it's 4 strategies when you're using Bollinger Bands. So let's look at it again. Again, when you see consecutive red candles, downtrend. When you see consecutive green candles, uptrend. Whenever you see a hollow green or a hollow red, and hollow means that the candle is not filled in. It looks like it's an outline and it's empty in the middle. That's a hollow candle. Anytime you see a hollow candle, no matter what the color is, the price is going up at that moment. But you want to be mindful of what the color is so that you always know the trend. Never trade against the trend, okay? So if the overall trend is going down, you don't want to be buying all the time. Just scalp. If the trend is constantly going up, you really don't want to be selling. You never want to step in front of the train, okay? You want to ride it. So, anytime you do a hollow red candle, which means the price is going up doing downtrend, you got a 50% chance of being right, okay? Because it can reverse and fall back down because you're in a downtrend, okay? So only scalp. So when I say scalp, that means get in, get out. You see some green, take it, get out. If you see a solid green candle come from the top band, Solid green means the price is going down, but it's going down during an uptrend. So that means it could go down for a little bit, reverse, and go up. It's no guarantee that it's going to go down and keep going down. So always be prepared to scalp, get in, get out. Now, in this case, had you got in, it actually broke down and it went into a downtrend. So yeah, this was some huge money, but this is not always the case. So always be prepared to get in and get out. Okay. Squeeze zones. Here's another example. You see how the bands are really, really tight. This is squeeze zone. When there is a squeeze zone, what are you doing? Not trading. Do not trade during a squeeze zone. This is your alert system to wait for a breakout move in one direction. After a squeeze zone, you see how these bands popped out? They popped out. That's let you know the money came. And when the money came, you going in whatever direction the money going. In this case, the money started going up. It's an uptrend. You follow, get on the train, and you ride it. Okay? If it was down, you get on the train and you ride it down. Okay? But do not trade in a squeeze zone. This is the fastest way to lose money. Okay? Now, once you get in a trade, you can use this whole line. So you got the Bollinger Band top, you got the Bollinger Band bottom. Then you see this little line that's kind of in the middle of the candles. It's called a whole moving average line. And what you can do is use this indicator to know when to get out of a trade. Okay, so let's look at this for example. This was a squeeze zone, the market moving sideways, you're not trading. Then all of a sudden, you wanted to buy from the bottom band. This candle was at the bottom band, you wanted to buy. And let's say you take a buy. The whole line is green. As long as this line stay green, you stay in the trade. As soon as this line turn red, you close your position, ring your cash register. Okay, so the whole line is a great indicator for knowing when to get out of a trade. But you're going to use the Bollinger Bands to know when to get into a trade. Okay, so it might seem like a lot right now, but you guys are not going to get it until you take your very first trade. So let's break down these indicators that I've added to your charts, especially for the new people, not the new people, the old people that's been in the class before, and you update your charts. Okay, so everybody know what the Bollinger Bands look like. Real simple. You short at the top, ride it all the way down. You buy from the bottom band, and in this case, it was a hollow red candle. So that means that I'm going in with the intention to scalp. Okay, the whole line is green, so I'm gonna go ahead and take that buy from the bottom band, but I'm not gonna get out because my whole line is still green. So that means it was enough money in the system to push it up some more. Okay, once my whole line turned red, I closed out. So if I got in off the bottom band down here and I got out right here, I still made some really good money. Okay, now here's an example of the market moving sideways. You see how the bands were far apart here, and then it kind of turned in and turned up, and they started being closer together. This is an example of a squeeze zone. Sometimes the squeeze zone is tight, but for the most part, it's just moving sideways. You can see it. The candles are moving sideways. They only going up and down in this small little channel. It ain't no money because the bands are tight. They're closer to the candle. This is money because the bands are not close to the candle. Okay, so it moves sideways. I'm not trading. Then it did a breakout move to the upside. How did you know? The bands broke out. Instead of the bands moving sideways, it turned down and this turned up. And that lets you know a lot of money hit the marketplace. All right, so I have an indicator, and this indicator is called the Bollinger Band percent. And this is basically just a confirmation of the trend. That's all it is. All it does is it indicates the current direction of the trend. And I put a number of different indicators that'll tell you the same thing to make it easier for you to not be afraid to take a trade. Okay, so let's say with this Bollinger Band percent, it's a line right here. This is a little moving average line. And basically, anytime this line crosses up above this 50, so here, this middle line is the 50. Whenever this line crosses over the 50, that is your confirmation that the market is in a uptrend. Now, when the moving average goes up or it's over the 50, but it ends up crossing below the 50, that is confirmation that the current market is in a downtrend. It's going into a downtrend, all right? And so how can you use this? Well, if I'm looking at my Bollinger Bands right here, right? I see a hollow red candle and it starts to form from the bottom band. But what I know is that hollow means up, but it's red because we were just in a downtrend. And so you probably say to yourself, should I buy or should I just wait and maybe it's going to go down some more? I'm not sure, or I'm afraid to take that buy because it's red, but it's hollow, which means the price is going up. So if I see this hollow red candle and I see that the whole line has turned green, I'm going to feel a little bit better about taking that trade, right? But let's say you bypass it right here. But if you look down at the Bollinger Band percent, you'll notice that right about here, right here, it starts to touch and cross that 50. So that means that if I look up, move it up, that's right here. Whole line still green. I'm gonna go ahead and get into the trade and I'm gonna move it all the way up. Now me, because I like to scalp, I'll jump in here, but I'm prepared to get out because I know because it's red, it can fall back down. In this case, had you got in down here, eventually the candle turned green and hollow, which means the price is going to continue to go up. Okay, so you could have caught a nice little run if you got in at the bottom because I like to buy extremely low. But if you are hesitant, that is when you use the indicators to give you confirmation. Okay, so if you didn't take it here, you could have been confident in taking it here because your hole was green and your Bollinger Band percent crossed the 50 line. That means you're going into an uptrend. You got in and you went to here. Uh-oh, let me go back. Okay, let's go to this one. Now, in this case, the Bollinger Band, because it's a lot of volume in the marketplace, sometimes the candle won't touch the top, but you know it's at the top because if you draw a line from the last time it touched the top and you draw it across, you will know that the top crossed these candles, okay? But in this case, you saw this big old green line. Solid means the price is going down. And let's say you hesitant to take this sale because it's green, because green means you are in an uptrend. The price is going down in an uptrend. You don't know if it's continue to break down and turn into a downtrend. You have no way of knowing that. And so if you need confirmation on whether or not you should take that trade, look down at your Bollinger Band percent. When this line crosses below the 50, remember the middle line is a 50. So when this line turns down and crosses the 50, that means that you're going into a downtrend. You can be more confident in taking your short. Because what happened, it went all the way down, not only to the bottom band, but it broke down. More money, most sellers, bulls jumped in the marketplace and dropped the price down even more. Okay, so that is how you use this Bollinger Band percent. Now, do you got to use all the indicators on the chart? No. As you start taking practice trades, like I said, you are going to find what is comfortable for you. Once you find out what's comfortable for you, You just keep doing it over and over and over and over and over again. Okay. But just remember, when it comes to a Bollinger Band percent indicator, whenever this blue line is over the 50, you in the uptrend. When it's under the 50, you in a downtrend. If it's moving sideways on this 50, that means that the market is moving sideways. And here's a perfect example. You see how the line is kind of, it ain't going up, it ain't going down. It's kind of laying on the 50. If you look up, what is the Bollinger Band doing? It's tight. It's moving sideways. What are you doing? Not trading. You're not trading. You're not trading. Okay? Another indicator that has been added to the new chart is the MACD indicator. So again, you don't have to use all the indicators. I'm giving you different setups so that you can trade based on what works for you. Okay? Now, this used to be the RSI indicator. For those who have been in the class before, it was RSI. I have now replaced the RSI indicator with the MACD. I believe by adding the MACD, you are going to be able to increase your win rate. Okay, so the MACD is an alarm system. And what it's going to do is it's going to alert you to when a potential breakout trend is about to occur. And it's usually going to give you an alert way before it happens. And so all you got to do is wait for it. Okay? So the way I have it set up, this MACD is going to give you a signal. So you see a red signal. What does that mean? You put in a short. You're going down. You see a green signal. What does that mean? You're going long. You're doing a buy. Okay? Now, the Bollinger Band is going to tell you whether or not you ignore a signal or not. Okay, so let me show you an example of some signals that won today. All right, so first thing in the morning, the markets opened up. The market was moving sideways, and then bam, you see the signal? You see a signal right here that the market was about to short. So we're going to move on up, and that's right around this candle, okay? So that means that the market dropped heavy first thing in the morning. You probably wouldn't have caught this. I don't like to trade the open, but some people do like to trade the open. I know a lot of people who make money right here and be done for the whole day, okay? But let's see, you see this solid red candle. Solid red means that the price is going down. That's what you want. You actually want this because it's going down from the top band. So anytime you see a solid red coming from the top band, that's usually money, okay? Then but let's say you missed it. I'm just gonna say, for example, you missed it or you was hesitant. Okay, let's say, wait a minute, let me, just a second, y'all. Thank you, whoever did it, thanks, appreciate it. Okay, so, let me go back. All right, so you see a solid red candle, you see your MACD signal. That MACD signal is telling you to short. So what do? You short. What happened? It shorted. The market shorted, right? You see this candle right here. Look at this one right here. We're gonna go to this next one. You see how this one said green? But you look up, and when you look at your Bollinger Bands, they tight. You're in a squeeze zone. So what does that mean? Ignore these signals. You see a green, you see a red, ignore them. How do you know to ignore them outside of the Bollinger Bands being tighter? You see this volume? You see, each one of these bars represent volume. The longer the bar, the more money in the system, right? So anytime you see bars like this, where they just look like little lines, but there's no length to them, the market is moving sideways. So this is letting you know the market's moving sideways. Your Bollinger Bands are tight, which is letting you know the market's moving sideways. So what you're doing, you're not trading and you're ignoring the signal. Then you got a signal right here. So you're looking up at your Bollinger Band, you're kind of moving, you're still moving sideways, but what do you see? It's this candle was actually a hollow candle coming from the bottom band. So you're going to see a hollow candle come from the bottom band, and it's a hollow green candle. Whenever you see a hollow green candle come from the bottom band, that is always money. So a solid red candle coming from the top is money, and a hollow green candle coming from the bottom is money. That means you're buying low, right? So you got the signal here, and then you looking. And then what happened? The bands popped out. And when the bands popped out, what happened? It moved up. Who alerted you? Your MACD. So the way it's set up, your MACD is going to give you your signal. Then you would got to buy, you're in the money, right? Now, here's another example. This one, it gave you a sell signal. Well, when you look right here, number one, you do see the whole line is turned red. Okay, but look, you saw this solid green. Remember how sometimes I say people are, you might be hesitant because a solid green from the top means that it's going down in the uptrend. You don't know, it might reverse and go back up on you. So if you hesitant to take it, wait till you get a signal. Here go the signal after this candle that lets you know we're finna go on a downtrend. What happened? We went into a downtrend. Now, each one of these bars on the MACD, as you can see, it has like different colors. When you see a solid red, like a bright red means a strong downtrend. When it starts to turn burgundy, that means that the trend is starting to break. That means that it's not still going down. Okay, so what you see is the bars went long, and then they went in, then they moved sideways, and then you saw a green. When you see bright green, that means it's a strong uptrend. When you see dark green, that means that the market, the trend is trying to break a little bit. And that's what you see. So you want to be always ready to close your position. Here, you saw solid red. What did it do? It went down. Then you saw the bars start to get shorter. That means money's coming out of the system. It's turning burgundy. That means the trend is breaking. But then it got right here, and instead of turning green, it turned back solid red. That means that the downtrend is continuing. So this is actually a continuation signal. And it started to do the bright red, the bars started to get longer, the candles dropped even more. So this is an awesome, awesome, awesome thing for you. So again, if you're looking at the MACD, trade the signals. Trade the signals because it's always an alert. Look at what the candles is telling you. If you ever see a squeeze zone and you got an alert, ignore the signal. Once you in a trade in the right direction, pay attention to the color of the bars. As the color of the bars change, be prepared to close out your position and ring the cash register. Okay, so just by adding this to your Bollinger Bands, you guys should be getting more wins. The next confirmation is kind of similar to the MACD as far as those bar charts, but this is the Bollinger Bandwidth. And the Bollinger Bandwidth, it just measures money. That's it, that's all. It just measures money. And so really, you only want to trade when there's money in the marketplace. When there's no money, it's always moving sideways, it's choppy, you'll lose money, okay? And so basically, it's real simple. This yellow line at the bottom is the basement, meaning no money. The top yellow line represents how high the momentum was, okay? And so what you want to do is you always want to be trading when this line is off this bottom line. So anytime this line is laying on this bottom line, it usually means it's no money in the marketplace. If you look up at the Bollinger Bands, it's a squeeze zone. So all of these indicators will always tell you when to not be trading. Okay, so anytime it's a squeeze zone, no money in the system, everything laying flat, don't trade, just watch. Don't trade, just watch. As you can see right here, this big old move to the downside. What do you see? This blue line is way off this bottom line. So that means it's money in the system. As long as there's money in the system, it can trend in one direction. Right here, it got low. And then right up here, you had already on your MACD got an indicator saying short. Then you saw this line jump up off this bottom line. That's telling you the money is in there. Follow the direction of the candles. And in this case, you would have caught all of this because you saw the money lift up. Now, something that you can be able to notice is that if you look at this and you kind of highlight the high point, you can kind of get an idea for the current session, how high it went before it started to fall down. That way, if you ever see it again, you can kind of get an idea of when it's going to fall back down on you. That's another little secret to the Bollinger Band bandwidth, because history always repeats itself, okay? So again, the band always got to be off the bottom line. If it's laying on the bottom line, don't trade. Just keep watching. Now, when you want to make massive amount of money, when it's over 25. When it's over 25, it's a whole lot of money in the system. See, lately, we've had a lot of validity, which means we've had a lot of movement, but it wasn't necessarily a lot of money, okay? And so we actually, for the last, I know today, the highest was like 4.74. That's really low for the market. So even though the market's been crashing down, people wasn't putting, it wasn't a lot of money because people was taken out, right? So it wasn't a lot of money, it was just a lot of volume, which is why the markets moved. But the money has only been around 4. If you ever see 2.5, when we see 2.5, it's a whole lot of money. It's also going to let you know when things are back to normal in the marketplace because people are putting a lot of money into the system. Okay, so anytime you see 25 or higher, just know that can be $1,000, $5,000, $10,000 day, just so that you know that. Okay, lately the number has been between 2 and 4, but you still can make money. Okay, but all the money ain't in the system right now. And that's apparent because you can look at the markets and the economy and you see that people are afraid to be buying and putting their money into equities. So that's why that bandwidth number is so low. So let's put it all together. So let's say you got all your charts. Now the link that I'm going to put in the group, I moved the MACD to the top. So it'll be the MACD first, then the Bollinger Band percent, and then the bandwidth. So what I did is I just realigned them. Okay. And so so it'll look the way I want it. It'll make it easier for you to trade the signal. So I moved the Bollinger Band to the top. And so I'll drop that new chart after this group. I'll replace the old chart link with this new chart link. Okay, so let's say I'm looking at the markets. Let's look at this again. Let's pay attention. I see the market went up. It went an uptrend. Okay, it went all the way up, touched the top band. Top band mean that it's overbought. I want to be looking for an opportunity to short. I do not automatically short just because a candle hit the top band because it can break through. Okay, I'm going off a candle that's telling me it's shorting. So a shorting candle is any time you see a solid candle, that means it's shorting. So let's say I see this and I want to enter a sale. Now me, I'll go for it. Okay, so I'll go right here into this solid green candle because I'm prepared to scalp. All right, but if I'm looking for confirmation, I'm looking at my Bollinger Band with it crossed under the 50. I'm gonna get, you can get in about right here. Then boom, you got your MACD. It told you the market is about to short. Go ahead and go. All right. Now, in this case, it's shorted down. And then if you look at the MACD at the bottom, it went from solid bright red. And then you see how it started to turn burgundy. And it looked like the bars start to get shorter. Look what's happening. It went down and then it started to pull back and make its way up a little bit. But you notice, even though you got a hollow red candle, all these candles are still red. So that means it's trying to push up in a downtrend. But pay attention to your MACD. It's burgundy, it went burgundy, then it got real low. That lets you know when you see this little line, a breakout move is about to happen. You're just gonna wait for it. So if you were trading, you would have got in up here, you'd have went down. When the MACD turned burgundy, you could have closed your position. So you already out the trade. You enclosed your position, you went short right here, you made some money, right? Then it went burgundy, and you're thinking that you're gonna maybe get a green signal. And now if the signals are flicking, where it's like green, then it goes away. Green, then it goes away. Wait for volume. Wait for volume. Because as you can see, this line is real low to this bottom line. So you gotta wait for volume. Then this line went up off the bottom line. The volume came, and what happened? Instead of seeing a green signal, the bars turned a bright red and they started to grow long. What happened? The trend continued downward. So even though you took this one and shorted and got out, you could have got back in here and went down because the MACD told you that that the trend was continuing to the downside. Okay, you also got confirmation with this Bollinger Band width because guess what? It crossed under the 50. So when it crossed under the 50, that means you in a downtrend. The MACD got bright red again. The bars started to get longer. I'm shorting and I'm going all the way down until I see some consecutive burgundy candles. When you see some consecutive burgundy candles, close out your position. I'm gonna go ahead and close out my position. All right. And so this is how you short. Short means you're just going to hit the sell button. With futures, we don't own anything. So we're not buying a stock. We're just trading an index. And what we're trying to do is get in position at a certain price point. That is all we're doing. And so we were short. At this top candle, we're going to hit the sell button. We're going to short. We're going to write it down. We're going to close our position, take our money. That's why I said we make money when the markets go down. We make markets when it goes up. Your left-hand chart is a simpler strategy. If Bollinger Bands is too much for you, all them indicators is just too much for you, you can trade on the left-hand chart. It's set up for 15 minutes. That means each candle changes every 15 minutes. It's slower and it's simpler. And the way the system works, I put two lines in here, which is the moving averages. For those of you who got the old charts, you only got one moving average. You had the 50, which is the purple line. I have added the 200. So the 200 is institutional and the 50 is the retail. Okay, that's the us. That's the hedge funds. The institutional buyers are the big people like the pension funds. Okay, when the pension funds get out of something, you get out of something. Okay, so here's what you're doing. You got both of your lines in here. What you're paying attention to is this gold line. Normally, I would teach this purple line because the purple line will give you the ability to scalp. But for those people, again, who have anxiety about all this, I'll put the 200 in because what I know for a fact is that when price action crosses the 200, either crosses above it or cross down, it's going to be a big move in one direction. It'll always be Guaranteed money for you if you just wait for it. Okay? So in this case, you see how this candle was red. Now up here, it's for them scalpers. People like me, as soon as the price action crossed over this purple line, if it closed under the purple line and the next candle opened still underneath this purple line, I was short. All right? And it may go to this yellow line, it may not, but all I'm doing is scalping. But if the price action breaks down this yellow line, which is institutions, which is big pension funds, the vanguards, when the price breaks below this yellow line, I immediately short. I immediately short, because usually if price breaks below the 200, you're going to see a big move in one direction. So in this case, you would have shorted here and you'd have went way down. This right here was money. I got the money flow index in here. And this line tells you the direction the trend is going. So in this case, if you missed this short and you waited to here, what do you see? You see that this line is under the 80. That means it's trending down. Now, this indicator, when this line crosses the 20, it's going to turn blue, which is really equivalent to green, but it looks blue. When that happens, this is letting you know that the money is coming out of the system and the trend is also breaking. And you can see it because look, it's moving sideways. Because on this chart, ain't no Bollinger Bands. So you won't know you in a squeeze zone until you're looking at this blue or you're looking at this red. Okay, so you're going to cross under. As soon as it crosses over, immediately short. Don't even think about it, just short. It's going to go down. Then if it crosses this band and turn blue, go ahead and close. So you're going to make money from here to here. Advanced traders, we can make money from up here and ride it all the way down. But to keep it simple for you guys who are beginners, you're only taking trades if the candle crosses the yellow line. If it crosses under the yellow line, you're going to short. Now, if the price action crosses above the yellow line, so as you can see right here, there was certain situations where it crossed over, and for some reason it didn't give a signal, but it should have gave a signal. So you would have did a buy right here, and then it went up to the top line, then it fell back down, but you would have made money immediately jumping in right here. You'd make money. You always make money immediately off of the 200. Okay, so you're going to buy right here. Scalp. Go ahead and scalp, get in. Here's another situation. If price went back down again, it crossed over. But see, the reason why I'm not going to do a buy is because when it crossed over, what color is the candles? They red. So I'm going to ignore it, right? It went down again. Then it tried to cross its way back over again. But this time the candle is green. So I would have took a quick scalp. I'd have went ahead and got in here. You'd got out right here, right? Because you start to see a red solid line. Red solid means what? Down. Okay, so you get out, close, take your money. It went down, right? I could have shorted right here and went all the way down. Got out. Then the candle started to turn hollow. Close your position. Wait for it to cross over the yellow line again. It crossed over right here. I'm going to do an immediate buy. It went up, closed. The next candle opened up. It went down, but it didn't cross underneath the 200, which is the yellow line. It turned around and then it pushed way up and it pushed past the 50. So all this was money, right? You could wait for it again. It kind of stayed. It didn't cross the 200 again to right here, which this is actually after hours. So again, you probably wouldn't, I mean, you still could have took that trade, but as soon as it crossed under, you did an immediate short and then it went on down. Okay, so this is just keeping it simple. It's just keeping it simple. All you're doing is making trades based on the yellow line. When the candle crosses below, you do a short. When the candle crosses above, you go long. That's it. Keeping it simple. That's it. So Let's look at the perfect, well, not the perfect trade setups. And this is something that you want to take a picture of. You want to have it next to your computer, okay? These lines represent Bollinger Bands. This is the top Bollinger Band. This is the bottom Bollinger Band. If you ever see a hollow red candle touch and come out the top band, immediately hit sell. Just hit the sell button, because it got to fall back in, because it's going up and it's red. Okay, so hit the sell button. If you ever see a solid green candle that comes up from the top band, goes out the bottom band, automatically hit a buy. If you see a hollow green candle come from the bottom band, hit buy. If you see a solid red candle touch or come out the bottom band, and then it reverses and the body closes on top of the bottom band, and if the very next candle is hollow red, it starts to open hollow red from the bottom band, go ahead and buy. But keep in mind, you got a 50-50 chance of being right, because this is a red hollow in a downtrend. So always be prepared to scalp. Get in, get out. If you see a solid red candle coming from the top band, go ahead and short. Just hit the sell button. Follow it on down. Okay? When you see back-to-back-to-back candles, that means you're in a downtrend. Just jump on the train. If you ever see a hollow green candle go up outside the top band, revert, pause, reverse, comes back down and closes on or underneath the top band. And if the very next candle starts to form solid red, immediately hit sell. Follow it down. If you see a hollow green candle go out the top band, pause, reverse, comes back down, and it falls on or underneath the top band, and the very next candle starts to open from the top as a solid green candle, hit sell. But keep in mind, you got a 50% chance of being right, because this is a solid green candle. Green still means uptrend. So be prepared to get in and get out. When you see a hollow green candle go out the top band and it pauses, reverse, which means it creates this little stem. If the body of the candle is still outside the top of the band, that is a signal of a continuation trade. The next candle, if it's hollow green, either stay in the trade or go ahead and take the trade and do a buy. And your MACD will confirm the continuation. Okay, so these are your setups. All I want you to do is pay attention to where the candle is along the Bollinger Band. I encourage you to not take trades in between the Bollinger Bands. So if the candles never touch the bottom band, never touch the top band, just don't worry about it. Wait for it to happen. Okay? So how do you take a trade? Let's say you're in the market, you pull up your charts. This is the open. And let's say you got a MACD signal that told you to short right here, right? And you see solid red candles back to back to back. Your whole line is red. Everything is telling you the market is going to go down. So what you're trying to do is you're trying to get at the open of a candle. So you always want to sell at the top of a candle. And so you want to get in position right here at this price. So in order to do that, in Thinkorswim, you're going to hit the sell market button. When you hit the sell market button, it is going to put you in position right here in this candle at this price. And when you hit the sell button, that means that you think the price is going to be lower. So that means you want to see long or consecutive red candles. So in this case, if you hit the short button right here and rolled it all the way down here, as soon as you saw a hollow candle start to form, you close your position, take your money. Okay, so to get in a sale, you hit the sale market button. So if you think the price is going to go down, hit the sale button. When you want to ring the cash register, hit the flatten button. Now, this is only the directions if you are trading from your computer and you're using thinkorswim on your computer. To take a trade on mobile devices, you have to watch the trading videos. Under Unit 1, it tells you how to take a trade on mobile because there's more steps on mobile. And if you got an iPhone, I even got a little chart that takes you step by step how to get in and out of a trade on mobile. So there's more steps on mobile. The easiest and fastest way to trade is through your desktop. Okay? So again, hit sell if you think the price going down, hit flatten to close the trade and get your money. Real simple. If you think that the price is going to go up because you're trying to buy low, because you see a hollow green candle coming from the bottom band, and you want to get in that candle right here at the bottom, you're going to hit the buy market button. When you hit the buy market button, it is with the anticipation that the price is going to go up. So that means you're going to see back-to-back green candles. So if I want to get in right here, I hit the buy market button. I'm in the trade at this price. If it goes up, which it did, it went up, I can get out at any time. You can ring the cash register at any time. In this case, I could have got up, got out here, or I could have kept it open because the price didn't fall back to where I started. So I'm still in the money. So it's moving sideways. And then guess what? It broke up some more. So I could have got in here and went way up here and then closed out my trade because I saw some solid green candles coming from the top. This is an example of where the candle's really not touching the top, but you know the candle is outside the Bollinger Band because it's money, so it pushes it out. But if you took this right here and you just draw a line across, you know that the Bollinger Band went across these lines. You will know that this went outside the top of it. Okay, just kind of like a common sense evaluation, all right? So you would have got out. So again, if you think the price going to go down, hit the red sell market button. If you think the price going to go up, hit the green buy market button. Whenever you want to close your position, regardless in which direction you're going, just hit flatten. Even if you pick wrong, just hit flatten to get out of a trade. So again, I know it's a lot of information. You're going to want to watch this video again. Remember your perfect setups. You really want to have your system set up on multiple devices. I will always say that if you really want to win in trading, you got to trade from a desktop. You cannot take all your trades from a mobile device because you do not have the same charts. The thinkorswim mobile devices do not have hollow and solid candles. All you got is solid candles in red or green. Okay, when the market is trending, it can still be profitable for you. But when the market is not trending, if you do not know whether or not it's really hollow or solid, you can get caught and you can lose money. And so your trading from your phone is your backup plan, or you can trade from your phone if you're looking at your chart on your desktop. You can do that too, but you don't want the majority of your trades on a mobile device. Everybody needs to invest in a computer. You got to invest in a computer. Okay, I'm telling you. Okay, do not take all your trades from a mobile device. Again, you can trade 23 hours a day, 6 days a week. The profit zone times is the times when the most money is in the market. 6:30 a.m. to 7:30 a.m. you'll find money. 8:30 a.m. to 9:30 a.m. is when the most of the money is in the marketplace. That's why a lot of us trade in the morning, and you should be done and out the markets by 9:30, 10 o'clock. 2 p.m. to 3 p.m. is when the sessions is about to wrap up. You may see money fall at that time. At night, if you can only take trades at night between 8 and 9:30, you might see a little bit of money. It's not going to be the same as the morning session, but you should be able to take a winning trade. For those who are up in the middle of the night, you can trade the overseas market 1:45 a.m. to 3 a.m. You're going to see a boost of volume within that time frame. Like I said, have two devices. Make sure you got a strong Wi-Fi when you're trading. You don't want to be trading and then your Wi-Fi go down and you can't get out of trade. Okay. Of course, when you're trading live, we do have numbers to our brokerage. They can take us out of a trade. You really want to have strong Wi-Fi. Again, pay attention to the news. Everybody should be watching CNBC. You cannot be a real trader and you never watch CNBC and you don't know anything about the economic news on the financial markets. Also pay attention to what's happening in politics. Every time Trump does a conference, it's going to affect the markets. Anytime a breaking news that some more people got the virus is going to affect the markets. More news, somebody died because of the virus, is going to change the news. Anytime the government passed a stimulus package, it's going to change the news. So your price action is going to be affected by politics and economics. Again, when you're about to trade, always look at the color. Do you see more red? Then you see green. That means the markets is going down. If you see more green, then you see red. That means the markets are going up. Make sure you're taking your perfect trades based on what the Bollinger Band is telling you and the color and the position of the candle. Again, if you see hollow coming from the bottom band, you can buy. If it's a red hollow candle coming from the bottom band, be prepared to scalp. If you see a solid candle coming from the top band, you sell. But if you see a solid green candle come from the top band, be prepared to scalp to get in and out. Okay. So again, use the Bollinger Bands to get in the trade. Use that middle hall line color to know when to get out. The rule of thumb is to not take more than 2 trades a day. I want you to get in the habit of having discipline. When you overtrade, you will start to lose money. So 2 perfect trades is all you need to keep your boss away. So I want you to master that. The best trading days, again, you can trade 6 days a week, but when the most money is in the marketplace is Monday, Thursday, and Friday. Now on Fridays, I will always tell you, get out the markets by 10 o'clock. Usually after 10 o'clock, they're gonna take your money. Just some words of advice, all right? Again, this is a lot. I don't expect you to know all of this. None of it is going to make sense until you actually get into the marketplace and you take an active trade. Again, I thought I would have had my Thinkorswim open. I do not. I'm gonna see if I can pull it up real quick. Yeah, Mike, stop doing the phone. That's how you lose. Stop doing the phone. Stop doing the phone. I'm finna try to see if I could log into my paper money side of Thinkorswim. Sometimes it let me in, sometimes it don't. It be taking forever, y'all. I'm telling you it do. I meant to have this open. It might let me in. Let's see if I can get in here to my paper money real quick. Thanks, Patricia. Thank you, thank you, thank you. And then we'll be pretty much wrapping up. I just want to see if I could get in real quick, just so you guys can see the chart that I'm going to post in the group tonight. Come on now. And even though it seems like a lot and it seems intimidating, this is going to be the best skill set you'll ever learn in your life. You will never be a victim to nothing that is happening in the economy or anything that is happening at your job. When you open up Thinkorswim for the first time, it is going to take forever to open up because it has to download all this information. Of course, I do my live trades through NinjaTrader, so I haven't really been in Thinkorswim. But it's about to pull it up. Come on already. It is raining here. So the internet don't want to be my best friend. Thinkorswim do not want to be my best friend right now. Come on. Oh, come on already. So it's waiting for data, it's waiting for data. And we almost done. All right. So this is what your charts is going to look like when you put them in. And so, like I said, the black section right here, this is the New York day session. All right. Anytime you see the price action in gray, that's after markets. And so what I want to do is I want to see what is the markets doing right now. And see, most people with your portfolio trading, y'all can only trade in New York stocks. We can make money all night if we want to. So I'm just going to zoom in. So I'm zoomed in with some price action right here. And I can get closer if I want to. So I can go anywhere in this chart with my cursor, and I'm just going to drag it because I just want to see these last pieces, right? So now the candle is real, real big. I could do the same on this left-hand chart. I just want to see what's happening right now at this session. Okay, now you see how unintimidating this is on the left-hand side. If candles give you anxiety, this is every 15 minutes. This is about as easy as it can go, right? Now, so again, this is people who you're scared, you can wait for it. It takes a little bit longer. You will get less trades when you're doing the 15-minute chart. You might catch two in the New York trade session. Obviously, if you're on the right-hand chart, which is a 5-minute chart, you can get multiple trades, okay? Now, if I'm looking at my Bollinger Bands, what is my Bollinger Bands telling me? Well, first of all, I missed the breakout move right here. The Bollinger Bands had got tight. I missed the move right here. And right here, the MACD worked. It gave you a signal. It told you that a buy was coming right here. Look at your haul line. Your haul line is blue too. So that means a buy was happening. So you actually could have took that trade right here. Look at your Bollinger Band percent. It crossed the 50. So when it crossed the 50, that means you're finna go to an uptrend. Here's your hollow red candle. Now, as you can see, it's not touching it. It's not touching it because it was more money in the system. And so that's why if you just draw a line from this point across, you see how I put the cursor here and it drew a line? Obviously, you can tell that this red hollow candle would have touched the line. But when money hits, the Bollinger Bands pop out from the candles. But if you draw a line, it went through the line, okay? So you could have been confident in doing this buy. This hollow red candle buy, you see it right here? You might have said, I don't know if I want to go long right here because that's a counter trade. But you did see where it crossed the 50. Okay, so it might be going into an uptrend, but I still want to wait for it. Even though your haul line is blue, I still want to wait for it. Bam, your MACD told you. So you could have got in right here. You could have went from here and went all the way up to here if you wanted to, because your haul line was still blue. So you just stayed in the trade until your haul line turned red. Now your haul line turned red, here go your solid green candle. Do you want to take it? I don't know. Because guess what? When I look down here at this Bollinger Band percent, it's just laying on the 50. It ain't crossed down below the 50. It's just laying on the 50. So I'm not going to take it right now. This right here, I'm seeing, instead of it being bright green, it's dark green. That means that my green trend for the moment is losing momentum. So I'm still not buying yet. I would have to wait for MACD to give me a green signal. This needs to push up from the 50 for me to go long. Now, do I want to short? I don't have no indication that tells me I need to short either yet. I don't see a red arrow for MACD. This has not crossed below the 50. I don't see it. So I'm not going to go short either. What this is showing me is that the market is probably about to move sideways. How do I know? Look at the C. You see how it pushed out like this when more money came in? You see how the Bollinger Band turned in? It turned down, and this turned down. That means that it's going to start getting closer together, and it's going to go into a squeeze zone, and it's going to move sideways. Now, to determine if it's going to break out and go higher, I will wait for this MACD. You see how it's flicking? Look at this. It'll flick between dark green and bright green. It would have to be bright green, but the bar has to go longer than this point. See how I turned bright green real quick? It has to go past this point. Look, you see how this Bollinger Band and picked up off the 50? But when I look down here, it ain't really a lot of money right now. It's still, it's real close to this bottom band. It ain't a lot of money. But I guarantee you probably about 10 o'clock and in the middle of the night sessions, you're going to see this line jump way up. And that's going to be all the money. Okay? So I haven't got an indicator to go long. This is kind of showing me that it might try to continue the continuation to the upside. But right now, I'm personally ain't going to take it because it ain't no money. I want to see some money. Until I see some money, I ain't getting in. Okay? I'm just not. Right now, my haul line is still red. My haul line is red. My MACD is dark green. It keeps flickering between the two. I need to see some money. Until I see some money that gives me confidence it's going to push up, then I'll do it. Oh, here you go. You see how this went higher than this? But it still ain't no money in the system. So I don't know how far it's going to push up. If it push up, it probably go to about here. Remember, it always stops where the previous high session goes. So this candle stops right here. So it probably stop right here. If it ever push up, the highest it's going to go is about right here. And then it's going to fall back down. It always repeats the prior. Okay. But let's say if I thought the price was going to go up, you're going to click the active trader button on the right hand side. And it is going to give you your control panel. Okay. Hit buy if you think the price is going to go up. You hit sell if you think the price is going to go down. That's it. It's going up at the moment. Look, you see how this MACD, you see how it went bright green and it went past these dark greens? Well, you could have scalped. Okay. And what I said is that it'll probably go no higher than probably right here. And it'll pull down just a little bit. So you're going to have to wait for it, but you don't know how long you have to wait for it. Why? It's only, look at the money. It's only 1.73. It ain't a lot of money. It is just a few traders. You can see the traders that's trading. It's not a lot of people trading. So it's just going to flick up and down, up and down, up and down, up and down. Okay. But if I want to take a trade and I felt like it was going to keep going up, I'm just going to hit this buy market button. It asks me, do I want to place a trade? I'm going to click send. I am now in the trade. I'm now in the trade. I've made $100 real quick. Hit flatten. Click yes. I'm out the trade. I just made $150 off of that move. Y'all understand what I'm saying? Do you see what I'm saying? Real quick. Be able to get in and get out and scalp. Okay, you don't got to get all the money. You want to get some money. Some of y'all would have loved to caught a quick $150, and I made it in what 2 seconds? That's how simple. It's money in every candle. You just want to get into the right position. Like I said, if it push up, it's going to push to about right here because this is the previous higher candle. It'll push right here, and then it'll fall down just a little bit. But right now, what do we see? We see consecutive green candles. Look down. It's off the Bollinger Band. It's higher than the 50. Look at the MACD. You got a light green candle. That's telling you. Okay, so it's only going to move between here and here only because it ain't a lot of money in the system because the Bollinger Band width is, as you can see, right here. Now, if you was only trading on the left-hand side, you ain't caught a trade yet. You would have had to catch it probably earlier in the day. It ain't no trade because as you can see, the candles is just stalling underneath this yellow line. So you ain't even got a trade yet. You got to wait for this to cross up over the yellow line for you to even go buy. Okay. But if you're scalping on the right-hand side, you're always getting an opportunity. All right. So I hope you guys get excited. Again, learn the system, take some practice trades. You're not going to get it until you take up practice trades. And then if you have issues, or it's something that you do not understand, make sure that you just drop your questions in the group. We are all here to help you. It is people who have been in this group that know how the process works, and we can get your questions answered, and we can get you going on. Okay? All right, y'all. That is going to end this trade session. I hope I gave you some value. You learned something a little bit more than the last time you was here. And like I said, I will update the link of the new chart this evening. So I'll probably make a new post and just say, here's the new chart, and hopefully tag y'all in it. All right, so upload your new charts and do them practice trades. If you've been in this class a long period of time, go ahead and do them practice trades. Get in, get out. Don't get greedy. Be okay with making $100 a day. You guys, be okay with that. That's going to put an extra couple of grand in your pocket every single month. And once you master your strategy, you're going to increase your contracts. And as you increase your contracts, those little moves means more money. All right. So I'll see you guys next Thursday, same time, same place. Y'all have a good night. Bye-bye.